puts in delta below you, doesn't it? Puts in gamma below you. So obviously what happens after those cheap puts go through the markets after the cheap puts go through, it seems as if they hedge those cheap puts by selling stock to go beta neutral. Now obviously that then drives the price down, but the price of volatility doesn't budge, doesn't it? The price of volatility, if you look at the calendars or anything like that, the price of volatility just really doesn't change by much at all. Even if we look at the volatility in terms of the calendar spreads, the volatility just doesn't change. So looking at that storyline, on the face of it, it changed at first. You can see that light blue line there. That's VIX-M, VIX-Y. So obviously this initial push was traded, and I think that's just maybe set the wheels in motion here. What do you think? So you can see that if I take this off for a second here, just look at VIX-M, VIX-Y. There seemed to be a very sizable adjustment back on the sell side here off of the prior highs up here. So that looks as if there was somebody doing something in the options space. Now obviously when we then check to see what kind of options we're trading, it looks like there was obviously this big surge in demand for some puts in here, or at least sizable puts coming into the markets. And that set the market off on the slippies. Now obviously what happened is that they unwound that position, and in fact, they entirely unwound the volatility spread altogether. They went back bullish. And at the same time, we started to see this big sell-off again here, which means somebody's buying even more put options during that phase of higher prices. Somebody's buying more put options there. And obviously, again, that sets up another slippy pace, and the price drops back down and through this level. There's still no reaction by the volatility traders. It's kind of interesting, isn't it? Usually, one would imagine that these two kind of measures would tie in with each other. We would expect to see some sort of a uniformity, if you like, from these two types of indicators. But the uniformity is just not there. You can see that the sell-off, the slippiness starts to come to a head here where the change takes place at the bottom edge, and now the two lines start to agree with each other here. And obviously they're starting to agree with that, allowing you to start buying into the low price at that stage, into that big volume bottom edge, which is no surprise because it is the bottom edge, isn't it? It's the bottom edge. This is the same sweep trade that we had from before off of that key level here. There's the big bottom edge, there's the big volume trade there, there's the narrative, and there's the storyline. If you wanted it, that was the trade there. Again, it's that same storyline from before. The overall shape, the areas that we had in mind, the narratives that we had in place, and yep, perfectly reasonable to consider this as an area. This was an area that we thought about before. Remember this area through here? It was that same level that we've been buying a lot of equities from this morning's trade, wasn't it? So we had a lot of buy trade into this area for that swing. Well, it is what it is. A little bit unusual.